Hey everyone, welcome back to Corporate Decoder. Today, NCMI just filed its latest current report, and I am seeing a key indicator that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company announced its second quarter financial results, and the market seems to be reacting, but let's look beyond the headlines. This is National CineMedia, Incorporated's or NCMI's current report, filed on the 11th of August 2026. It is like a snapshot of important events happening right now. The main reason for this filing is to share their financial results for the second quarter that ended on the 2nd of July, 2026. Now, let's talk about what the company actually does. They are involved in communication services, specifically in advertising. Their stock is traded on the Nasdaq exchange under the ticker symbol NCMI. This section is the heart of the filing today. The company released a press release announcing their financial results for the fiscal second quarter. We are going to dive into what those numbers are telling us, even though this information is furnished and not technically filed in the same way other parts of the report are. Think of it as them giving us the numbers, but with a small legal disclaimer attached. So, what did they announce based on the news headlines? It seems like their second quarter earnings were released on this date, and the market reacted positively with the stock rising. However, some reports also suggest they missed expectations on earnings per S-hair by a small amount, and revenue estimates too. This is where we need to dig deeper to understand the real story. Looking at the research context National CineMedia, with a market cap of around $355 million, is in the advertising business. Their stock has been trading in a range, and they have about 248 employees. It is interesting to see that a significant portion of their stock is held by institutional investors like Blantyre Capital Ltd, which holds almost 29%, and Orbis Allen Gray Ltd with nearly 10%. This tells us that big players are watching this company closely. Now, let's try to get a sense of the actual financial performance. While this filing itself doesn't contain the full financial tables, it points us to the press release, which is where the key numbers would be. Based on the news, the market saw a rise, suggesting investors are perhaps focusing on other aspects or are optimistic about the future, but the mention of missing earnings and revenue expectations is a point of concern. This is like getting a grade on a test where you passed, but didn't quite get the score you or the market were hoping for. When a company misses its earnings expectations, even by a little bit like $0.02 per S-hair as one headline suggests, it can signal that their operational efficiency might be under pressure, or that their revenue streams are not growing as fast as anticipated. For NCMI operating in the advertising space, this could mean that companies are spending less on advertising, or that NCMI is losing market share to competitors. Let's consider the broader market. Advertising, especially in sectors like entertainment or media, can be quite sensitive to economic conditions. If consumer spending is down, businesses often cut back on advertising budgets. First, this means companies like NCMI are often at the front lines of economic shifts. The fact that the stock rose despite missing expectations is curious. It could be that the guidance for future quarters was strong, or that the market has already priced in some of these challenges. Or it might be that the institutional holders are confident in a turnaround. The large stakes held by firms like Blantyre Capital and Orbis Allen Gray suggest they have a deep understanding of the company's business and its potential. Term strategy or the current valuation that makes them hold on. For a company like NCMI, which is in communication services and advertising, the ability to adapt to changing media consumption habits is crucial. Are they effectively reaching audiences across different platforms? Are their advertising solutions compelling enough for brands? These are the questions that the financial results should ideally answer. While we don't have the specific numbers from the press release directly embedded in this filing, the general sentiment from the news is mixed. A stock rise on mixed results can be a sign of market volatility or a specific investor sentiment driving the price. However, consistent misses on earnings and revenue can, over time, lead to a re-evaluation of the company's prospects. If we were to draw a parallel, think about companies that have struggled to adapt their advertising models. For instance, some traditional media companies that didn't pivot quickly enough to digital advertising faced significant headwinds and stock declines. It's about staying relevant in a fast-evolving landscape. What I'm looking for when I see a filing like this, even with limited immediate financial detail, is the underlying trend. Are these quarterly misses a temporary blip, or are they indicative of a larger, more persistent challenge? The heavy institutional ownership suggests that there are sophisticated investors who believe in the company's ability to navigate these challenges. Their conviction is often based on more than just one quarter's results. My biggest concern is whether NCMI can effectively capture market share and grow its revenue in a competitive advertising environment, especially if the broader economy continues to face uncertainties. The slight misses in earnings and revenue, while perhaps not alarming on their own, become more significant if they become a pattern. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Join our Discord linked in description.